the order book on the bid here. Let's assume the bid order book has, say, 20 contracts at every bid price. Okay, so you get these five prices that have 20 ticks of 20 lots of contract. Everybody following with me so far, guys? A 500 order on the offer, a 100 lot market order filled in behind the 500 offer, and 20 contracts on the bid. So what happens? The price almost instantly, and it would be instant, correct? Yes or no? Instant would trade here, because 100 lot uses up all of those contracts instantly. So if that uses up all those contracts instantly, what is left in this space? What's left in that space? It's just a huge big dose of a vacuum or emptiness. There's a huge void in this area, right? There is this massive void in this area. And it's never massive, as in like, it's not like 20 ticks deep. It can be 20 ticks deep on something like gold at times. But what happens is you get this kind of backfilling of these order areas because it's an inefficient place to have a gap, right? It's not natural to have a gap. So a lot of the times the next buyer that comes in, because obviously they're getting 5 tick discount, so usually a buyer comes in here, right? So a one lot buyer coming in here would send the price right up by 5 ticks, wouldn't it? A one lot. So if you think about it, a single contract buyer there would send the price up 5 ticks. Is that bullish? If that price goes up 5 ticks, does that market suddenly become bullish on a one lot? No. So in other words, you get this filling in of the order book, and obviously things kind of slow down in here. So now the market kind of balances up, but obviously there's a very bearish angle to this. There's a very bearish angle to this trade. So when we understand that there's a very bearish angle to this trade, you know that there's obviously going to be an opportunity for you to start working that short sell into that fast money move. And that's exactly what you saw, effectively what you saw on these fast candles here. Do you see how there's a vacuum behind them? You see that vacuum? And you get that opportunity to sell 90, you get that opportunity to sell 95s, and all of a sudden you're trading at 65. That's a brilliant trade there on a 5-second chart. It's that backfilling of vacuums that becomes very, very important. It's not, I've heard somebody talking a load of pish, and they were supposedly some kind of guru that the market makers required to fill in the vacuum with orders. They're not required to fill in any vacuum with orders. You know, it is what it is. It's there, and it gets naturally filled in, but there's no requirement. They get fined and all that guff. They get fined if they don't fill in the vacuum. There's just so much made-up shit. It's unbelievable. But you get the basic idea that when you see a vacuum forming and you get an instant fill of that vacuum, and you don't always get an instant fill. For example, you saw this candle here, and it did fill in, but it filled in. You can see the low price was 76s, and it filled in 84s. You don't always see a blue candle beside it. So you saw that this big candle here with that huge volume does fill in, and it gave you a great chance to keep selling into that on the uptick. You got all the way back down again. I mean, you wouldn't have lost money. For most locals, when they start trading, if I had to tell a local what to do on their first day of trading, I would be saying, watch for the toxic flow and go with it as soon as you see some back pressure. So when you see a toxic order flow, in other words, I'm not really that interested in a buyer of a low price. I'm interested in a seller of a low price because I know that that's toxic. If I see a seller of a low price like that, now start selling it with the toxicity. Do you understand? As a local, that's the first trade I would teach a local to trade. Not that we have any locals anymore, but back in the days when we had some new guys going down onto the IPE, the first thing I would tell them is trade in the direction of the toxic selling at lower prices. Trade the back pressure trades, trade the gap fill trades, trade the back pressure. When you see that little backfill coming into the markets of orders, because it only takes a one lot to push the price up, literally, during those periods. When you see a buyer at higher prices here, would you agree that now you could start thinking about the possibility of bidding into that area? Well, you can't bid 30 seconds later, really. I mean, of course you can, but you know, it's always better to try and get it if you can get like a 5 tick, 6 tick back pressure on the actual trade. So you need to find where the high of the trade is. So 85s, you could start saying, right, I'm going to bid 82s, 81s, and you could bid 82s, 81s. You can see you didn't get filled for 5, 10, 15, 20, 25 seconds. Still possible 25 seconds, but you're starting to lose the will to live as a local within 25 seconds, aren't you? Similar, another buyer at higher prices there, so I'd be interested in a backfill trade. Again, the high price was 94, so probably around about 89, 90s, I would be interested in starting to bid into that as a trade. And obviously, if you can see that there was opportunities maybe to start bidding into that backfill type trade just there. And you can see that we got a little bit of a retest back to the highs. That's what a local's trying to do. Remember, I'm talking about traders that want to trade for 3 or 4 or 5 ticks. Because if you wait for a 5 tick pullback, you've got 5 ticks to the previous high. If you wait for a 3 tick pullback, you've got 3 ticks to the previous high. That's what a local's trying to do, is get back to the previous high. So when you buy in here, your job is to get back to the prior high. And the prior high for that candle was here. The prior high for that candle was here. And they got back to that prior high. Would you want to backfill that trade there? No, because you know, when you think about it, it's coming from a pullback sell. Now, you might be arguing that it's a sell at lower prices, and therefore it still qualifies, but that depends upon whether you've had the chance to look backwards and say, is that a sell at lower prices or higher prices? The only way you can answer that is to zoom out of your charts. Is that sell, that big sell candle there, at lower prices or higher prices? Well, you can see quite clearly it's a sell at lower prices, right? You can see the low was there, the high was up here. We're not even at the halfback trade area here. So when you see that sell there, these buys are still okay, but that sell still qualifies as a sell at lower prices, yes? So as a local, you would then look at that and say, right, I want to try and sell into a backfill. I want to try and sell back into that gap. I want to try and sell on the uptick, which will normally be about 5 ticks or thereabouts from the trade. The low price was 78. You could start offering 83s. It never reached 83s. Unfortunately, it traded 82s. But obviously, your idea as a local is to just to get that short on, because you're going to make your 3 or 4 ticks in that trade. There is a better example of one here. You see how deep that pullback was there, guys? The low price was 62. And it got all the way up to 69. So if you put 67 offers in and you got filled at 67, you would have been delighted with that sale, wouldn't you? Absolutely delighted with that sale. Remember, the idea is to buy high and sell low. You're buying high and you're selling higher. You're selling low and you're buying lower to close out your position. Comprende? And you can see that that was a beautiful little short sale. 68s eventually traded 54s for a local. 14 ticks is like a dream come true for a local. That is a brilliant short sale. You understand what we're showing? You understand the idea? Now, anytime you see these, you know that you're at bottom edges, so you can't be like buying a backfill on this buy trade here. That's not what I'm really excited about, that type of buy trade there. That's not a backfill buy. But when you see a kind of acceleration candle at this price, you could count that as a backfill buy. So you could start bidding that price there for the retest of the highs, couldn't you? And as soon as you get the retest, you take your first contract out and you stops at break even, as a local would do. Stops at break even. So you can see that that local there made 3 or 4 ticks profit, touched into the highs, scratched out at break even +1. Nothing wrong with that as a scalper. You see it? You see the basic principle behind it? You want to try and see a buy breaking into new highs, and then take the back pressure on that trade. You see this candle here? Good buy, breaking into new highs, good solid volume, and then you can see the high of the candle was 84. You could probably start bidding 79, and you probably have a good shot at some upside. Now, when I trade oil, my back pressure trades are usually about 5 ticks away. That's my normal starting bid, is 5 ticks away, yes? So we always like to see at least that 5 tick area against the prior highs. That means sometimes that you have to then cross if you're busy, if you want to be on the trade. So for example, the next big candle here, you can see had a high price of 89. I'd start bidding at 84. I'd start putting my bids in at 80. As soon as I see that high candle, I'm putting bids in at 84, right? So I'd have a bid in there at 84s ready to grab that if I'm still excited about the buy trade. And obviously if I don't get filled, I've got a choice of bringing those buy trades into that price area to try and get filled on that trade. Yeah, try and get filled on that trade if I like it enough. And obviously if you got filled on those, you can see you got a reasonable upside as a scalper, didn't you? A reasonable upside as a scalper. But it's about trying to find the right trade at the right price. You know, when you get the right trade at the right price, you can see there's a big down candle there, but it has another big down candle beside it. So, you know, that's a good solid continuation candle, good solid continuation candle into new lows. That's the kind of candle you're looking for there. The low price eventually was 75, but the low of the candle was 77, but it's a continuation, remember. 75s, I would start offering 80s. I would look at start offering 80s into that type of storyline there. You see how often these trades make money if you get filled? You see how often they make money without an awful lot of risk? Nice, solid continuation sells. And if you did take that, think about how far you actually ended up getting that scalp trade. That was about $500 scalp. Pretty good outcome, guys, pretty good outcome. But that's you right in the world of locals trading. That's the standard locals trade that you all would learn about if you were a local. Certainly if you came to my, if you came to the IPE when the IPE was a thing, you would obviously, that's the first trade that I would be teaching you to do, because it's all about, number one, understanding the interns exercise, and then number two, about getting the right trade from the interns exercise, yes, which is basically almost, the same principle behind it.